Okay, everybody, welcome back. Delighted to have Yves Longchamp joining us here, who's head of research at SEBA Bank, to talk about cryptocurrency, which I think this is going to be the most interesting session of the whole thing. So thank you, Yves, and the floor is yours, and we are fascinated to see what you're going to tell us about crypto. Over to you.
Thank you very much, Jim. Thank you very much for the invitation. Pleasure to be here with you. I think as anyone else, I regret not to be in London, but that's life. I hope next time will be better. Indeed, I mean, it's, in terms of alternative investment, it's quite clear that cryptocurrency is definitely part of it. I think we're probably at the fringe of the type of alternative investment. And my goal today would be to, kind of present you cryptocurrency as a sort of emerging asset class. And that would be the very idea. Actually, just to give you an idea, what I would like to do is, I guess you don't know SEBA Bank, and I know it should not really be part of the game, but I think that in that specific case, it would be good just to go through it and to explain what we do, how we are, and then I will explain you blockchain, cryptocurrency, why it's a good emerging asset class, and why it's here to stay. So if you're happy with this table of contents, I propose to go directly to the next slides, please, Jim, if you can switch. Yeah, fantastic. So let me just quickly present. This is not really part of the presentation, but I think it makes sense because Switzerland is a very special country in the world of cryptocurrency. On the 1st of February, there was a new law, the DLT bill that has been passed, and make a digital ledger an official way to store value. And with that, it definitely opened the door to blockchain as a technology to help financial services, but also to develop cryptocurrencies. SEBA is a bank which is based at the heart of the crypto valley, so in Zug, Switzerland. And we are a bank like any other Swiss bank, meaning that we have a FINMA banking license. And we operate mainly in Switzerland, but also globally. And what we do, just to give you an idea, our clients are sophisticated investors or institutional investors. We have banks, asset managers, family offices. We have many of, let's say, rich types of clients that want to diversify away from the traditional asset class. And we offer different types of services, digital banking services, which is nothing new. But we do it with crypto, so you can deposit and withdraw some crypto at our bank. So we take care of your keys. We also offer digital corporate finance. For example, you would like to increase your capital and issue shares, you can do it on blockchain. We will help you to do that. We offer digital investment solution, so it's very much the same as any other wealth management in Switzerland. Offering investment products. We have a mandate as well, crypto mandate. We are the first in the world, to my knowledge, in research, which is what I'm doing. And finally, we have also trading and credit solutions. So you can trade directly on our platform, and you can also pledge Bitcoin, for example, and get a credit on fiat. So, the idea is to be the bridge between traditional finance and this new world, and this is what SEBA is offering. And we are here for about 2 years. But anyway, I propose now that we go in the heart of the subject, and then I propose to go to the next slide, please, and to give you a sort of introduction to what blockchain is, because I think it still makes sense to explain. There are 100 different ways to define blockchain, and I will use something which I guess help to understand the very basic idea. I think that the distributed ledger or blockchain is nothing new per se. Obviously, the technology used is different, but what it does is not much different. And I used to compare it with the ledger book. So you can say that the distributed ledger, if you read the definition there is on the green box, on the top green box, a blockchain is a growing list of records called blocks that are linked using cryptography. And then you can say that the book or a binder is a growing list of records called pages that are linked using holes. So the technology is actually a bit different, but the idea is very similar. The idea that you write something on a page, And when the page is full, then you need to put the page you just wrote on the top of the binder, and then you add another one, you start another one. So this is why you have a chain on block, and this is why a binder is a chain of page of paper. Each block has a certain size, in the same way as a page has a certain size, and when it's full, then you need to move on and to start a new page. And actually what you pay as a user of blockchain is you pay for the transactions, for the message you want to put into, to write on the page. Actually, you are paying for block space because this is secure block space. And the more you write, the more space it takes, the more expensive it is. And the beauty of that, if you want to transfer 1 billion Bitcoin or 1 Bitcoin, the cost would be the same because the space it takes is exactly the same. So it's not linked to the value, it's linked to the data it takes. That's a very idea. And there is something which is different and offers kind of new features. This is, first of all, this is its organization, this is decentralized. I will come back to it later. This will be the next slide. I think it's important. This is immutable, so you cannot erase, you cannot eliminate anything. What is written here forever, mistakes as well. This is programmable, which is quite nice, meaning that you can add condition to your money. Typically, smart contracts say, if you do that, then I will transfer your money. And this is the idea of programmable money. This is transparent because this ledger is available to everyone. And this is highly secure, and the security is based to the idea of cryptocurrency. And most of the time, people say, fine, okay, I like blockchain, or people say blockchain is good, but Bitcoin is bad. And I would say that's kind of a difficult statement because either you like blockchain and Bitcoin or the cryptocurrency, or you don't like any of them because they are part of the same system. They are literally the flip side of the same coin. And the next slide will tell you why it's so important to have the cryptocurrencies. I mean, you have different types of blockchain. You have the private blockchain, which are not really much interesting now. It's like the intranet. No one really cares about that. And the other one is the public blockchain, when everyone can participate to it. And Bitcoin typically is a public blockchain. And what I want to tell you here that cryptocurrency exists, first of all, to secure the blockchain. So then you attach a sort of a service to the cryptocurrency, to the message you would like to transfer. But actually, the key idea is cryptocurrency. And I will explain you why, because I think that if you understand why it's important, you will see that this is different than anything else. And it definitely the basis for a new type of asset class. So I will just give you an example of who is doing what. So in the middle of this web of miners or validators exists a blockchain, which is the ledger, the truth, or the book, so to say. And miners and validators have, let's say, appealing names, but actually what they do is nothing else than doing a content. They are checking whether what is written in the book is made correctly. So typically Alice, in my example, would like to transfer 1 Bitcoin to Dennis. So the accountant, minus or validator, will check whether Alice has indeed a correct wallet, has indeed 1 Bitcoin, or even a bit more because she needs to pay a fee for the transaction. And if Dennis has a correct address, it's like when you want to make a transfer with Swift, you need to follow certain rules. And the accountants, miners and validators are doing exactly that. They have different names because they may work differently. Miners is working according to the system called proof of work, like Bitcoin, and validators are using proof of stakes, which is another way of organizing the work. But fundamentally, they do the same job. They check for the validity of each single transaction, then write the transaction into a block. When the block is full, they will solve a kind of puzzle, which is called the hashing, and then they will propose this block. They will show this block to everyone. And because this is a decentralized web of miners, everyone knows exactly what the other one is doing. And the first one who is able to show the new page, which is correct, will say, I have it. Other one will check it and say, oh yes, that's correct, that's a good page, everything is fine, you have it. And then you add a page on the binder and you start a new one. And because you did this work, you are paid in cryptocurrencies. So, you know, and as anything else, you need to have a carrot and a stick to make the system works. And I mean that, you know, if you study at the London Business School and you are earning a master degree, the sticks is quite clear, actually. You are not earning anything for a time. You have to pay a lot. And then even worse, you spend a lot of energy, time to do your work and to be prepared for one single exam at the end of the year. So you have a huge cost. And if you want to participate, you're free to participate to this game. If you want to do it, you better to do it properly. Because if you do it, then you will receive a piece of paper at the end of the day, which is a certificate, or a token of your let's say your value in the market, and you hope that you can rent this human knowledge, and you will earn something with that. The idea of cryptocurrency is exactly the same. Everyone is free to join or to leave the game. You have a clear cost when you want to enter as a miner. The miner is to have the right settings, to have computers, to pay the energy bills, typically. So this is the cost. But if you do your job correctly, then you will be rewarded. And the reward will be made of two elements. You will get the block rewards. Typically for Bitcoin, you receive 6.25 Bitcoin currently, and you will get also parts of the fee. And this is why it's public blockchain, because you are completely free to join or not. No one will tell you what to do. If you don't want to join to play the game anymore, you can leave. It's like when you are earning your master degree. If you want to drop out, just drop out. This is your problem, but it will cost you a lot. And this way of having a completely free, open society, fully democratic society with strict rules, which are clear to everyone, like it is clear for every student, make that each single miner survives. So each single student is trying to do its best to get the token. And by doing that, it's creating the reputation of the London Business School. It's creating the reputation of the blockchain. And then it's adding value to the degree you will earn, to the token that is sent. So it's adding the security to the quality of the knowledge that LBS is providing. And this is how it works. So the more you do it on a selfish way, you do it also for the common goods. And because you benefit from the common goods, the value of the master increase and the value of the token increase, so you are even more incentivized to increase. I mean, this is why you need, first of all, a cryptocurrency to secure the ledger, to secure the records within the ledger. Then on the top of that, you can add some features like, transferring value, but you can also transfer non-monetary assets, like your digital identity that will be stored and saved in this type of environment. And actually, what I find is quite interesting is, I hope, actually, that was my goal, to show you that even though it's not clear how to value it, it has value in the same way as what is the value of your master degree from the London Business School? No one really knew. There is no market for that, but you know it has value. And so the value of this token doesn't depend on discounted cash flow, because there is no discounted cash flow. It's not really a commodity because you cannot do anything with that. It's kind of a currency, but not completely. It's not a fixed income investment either because you have no return. So it's something that has value and it's different. And the main elements behind what gives value to a blockchain is its security, that we can also measure with hash rates, among others, and with the number, the decentralization. And this is what you can do with that. So, I mean, in my view, this is a new asset class because this is different. The value drivers of the blockchain technology are different from all others, so they must be different. Because they are different, they form a new asset class. And the beauty of that as an investor is that it provides great diversification potential. This is what you see on the next slide. Thank you. On this slide, we show the advantage of adding crypto assets to a traditional, let's say, to traditional portfolio. Traditional portfolio is made of equity, bonds, and some commodities. And if you add Bitcoin, which is the dark green line, you see that in the first 10% really add a lot of diversification potential. Then we use the SEBA index, which is a homemade kind of, let's call it, smart beta index. This is the top line. It's really adding a lot. So we think that even within the crypto verse or the crypto space, there's diversification potential, and KRIX index is non-investable index, but just cover the, if you wanted to invest in the whole space. And the beauty of that, even if you add about 4 or 5% of your portfolio, you literally make your Sharpe ratio explode. And we did it on several, this is for the whole environment. I know most of you study finance, so you know the shortcomings of this kind of stuff. But I change also the variance covariance matrix, change the correlation coefficient, look at the good time, bad time, and actually it's still quite good to have. So I will propose, and this is probably something we can discuss later, that this is an emerging asset class, and it unleashes a new source of return and enhance diversification. Let's go to the next slide, please. I mean, we've been in a way very technical, someone very specific to blockchain, and Bitcoin is just Bitcoin. It's like, I cannot, you know that Facebook is not internet, and Bitcoin is definitely not blockchain. It's much broader than that. But we are at the beginning of this new digital ecosystem. And the way I see it and why I believe it's here to stay is that blockchain is at the basic, it's a new protocol to transfer value, and this forms the internet of value, with which you can transfer digital assets like Bitcoin, but you can transfer also shares. You have also your digital identity, which is something which is valuable but has no price, it can be your property rights. And when you combine it with the Internet of Information, we know the Internet of Things, I mean, we allow this digital ecosystem to be complete. And I'm pretty confident that in the future, in the coming years, we will see new services emerging in the same way as we observed in the 2000s and 2010s, new services emerging with new possibilities and a nice way to capture value with that. So to sum up, and this will be the last slide, if you can just go to the next one, thank you. I mean, cryptocurrency is an emerging asset class in my view. We have seen that blockchain is decentralized, this is immutable, programmable, transparent, and secure database. In the idea of a public or what we call permissionless database, blockchain, I mean, where everyone is free to participate or to live, you need to have a way to incentivize people to do the job properly. And the only way to do that is to have a cryptocurrency that captures this kind of value. So it's first of all to secure the system, and you as a user, you pay for a block space, you pay for this secure vault, if you want, and this is how the system works. This is organized in a new way. This is why I call it a new business model. So you have new value drivers, and this is what forms, in my view, a distinctive sort of asset class. And then the beauty of that, if you backtest it, it really adds a lot of nice returns to your portfolio, a lot of diversification to your Sharpe ratio, flags around. And finally, this technology has been proved to be solid. We see institutional investors getting into it. Also banks trying to use it as a sort of new infrastructure for transferring value. And I think that it will also open new possibilities in this digital ecosystem. So I hope that you're convinced that cryptocurrency is an emerging asset class. If not, you have to try by yourself, or you need to contact us directly. Thank you very much.
Great, thanks, Yves. That's fascinating, and I now know a lot more than I did 20 minutes ago. Maybe just a couple of questions for me, just to kick it off. I suppose, like, first up, what drives value in this market? So what drives the value of the currency? Because obviously it's it doesn't appear to be similar to what would drive like the value of the dollar or the value of the pound, etc. So, and I guess how do you, from an investor perspective, how do you determine entry and exit points?
I mean, the most important element is what we call the ecosystem. Ecosystem is quite huge, but I mean, you need to know who is behind, which means, this is a software which is developing, so you need to know how many people work for this software. For Bitcoin, it's kind of weird because it doesn't belong to anyone. But the new types of blockchains, usually you have a crew behind, which are well known with names, good website, you know what they do, you have the roadmap. So you have to see the interest here. And this is more, let's say, on the supply side, if you want, just providing the best software or the best project that is existing. What you need to know also is who uses it. Because if you have the best project ever but no one uses it, it won't work. And maybe here to take a parallel with US dollar, why do you take US dollar with you when you travel, wherever you go around the world? Just because you know that someone else will use it, wherever you go. This is the international currency that everyone uses. And the more people use it, it's kind of a tautological explanation, I'm aware of that, but it works for US dollar. The more people use it, the more it's attractive to you because you can exchange to many people. So you need to understand who is behind, what are the developments. You need to understand who is using that, more the kind of a demand side. You need to have a clear view of the security, and the security is based on the hash rates, so the difficulty to kind of update the block, but also to the decentralization, because if I am the only one, the only miner, or the only accountant, only validator, no one will check if I do a correct job on that. So either you trust me or not. But there is no reason to trust me more than anyone else. So if we are many different accountants and we agree on that, that will be good. So decentralization is key to understand the element of security. And finally, you need to understand also like a big ecosystem. It's like a firm providing different types of products, but everyone is focusing on a niche. One is here, the other one is here, the other one is here. And you need also to understand where they are positioned so that you create let's say, a big market for cryptocurrencies, actually. That's, and this is probably the idea, the way we look at that.
Got it. And maybe another one to follow up, just apropos of current events, the proliferation of coin. That there's so many that are now out there, and how to sort of figure that out from an investor's perspective. I mean, what makes sense, what doesn't make sense, and why.
Everything is open to everyone, so you can literally copy and paste the next blockchain code and create the gem coin. And if someone buy it and you make a trade, you can make a lot of money. So we have. So I don't I don't know your ability to create the blockchains, but I mean it's important. It's why it's so important to look at who is behind and what the goal for that. Because there are many copy and paste of copycats of everything. We saw that typically, Dogecoin, which being something which been copy and paste and probably has not much developer behind. And then you have a guy whose name is Elon Musk or something like that, tweeting stuff, and it's going up and down. And then the day after, you have a copy of that, and you have new dog names to create different types of cryptocurrency. This is sort of joke. So I think that you can make a lot of money for that, but this is purely speculation. If you want to do fundamental analysis, and this is what we propose at SEBA, we develop what we call the coin selection process. When we look at the blockchain, who is behind, where the money come from, do they have enough money? We also talk to our research and to our legal and compliance department, checking for if the money is clean. If the guys behind are related or to some illicit activities, and so you have a sort of list we do for private equity, and then you try to understand if there is demand for that, if it literally solves the problem, yes or no. And when you do that, I think you can already get rid of, I don't know, maybe 90 to 95% of all the coins. And then you can start really digging into the details, contacting people, trying to understand the beauty of the token economics, which are actually the roots of the game. And then you start to understand how it accrues value, why Bitcoin has a a specific token economy that works. It's like, playing games. Poker is a good game, chess is a good game, Monopoly is a good game as well, but they are all different rules of the games. And you may prefer some rules of the game, some others, but that's exactly actually how it works. So you need to understand the rules of the game to play correctly. That's really key. So there are many different qualitative elements.
So let me pick a question out the Q&A here. So just around the sort of the premise of volatility, which is a bit evident, but also the way that talks to the way that this is going to be regulated, and the fact that it's it breaks the system, so the system might not like it very much. So how do you, as there, underwrite the investment risk of that kind of outcome?
I mean, your question is about, you say that kind of a DeFi for decentralized finance is kind of a threat to traditional finance, and how this will be kind of
yeah, how will the regulators react to that? So if you're the Fed and you take a look at this and go, this is like breaking our system effectively, we're not going to like it too much.
I work myself for central banks, and I'm first of all an economist of the central banks, and I think that we have to be careful with that because, again, Facebook is not the whole internet, and the Bitcoin is not the whole internet. Bitcoin, to some extent, could be a threat to the fiat banking system, right? But if you know history well, you know that also, you know that, we tried gold standard for a while and it didn't work. So why would we try kind of Bitcoin standard? Because we need elasticity. This is why the Fed has been created, actually. But you need also to have some kind of outside money. You need to have a gold, for example, which is a nice way to discipline central bankers. And this is probably what is happening now. So for Bitcoin, definitely it can be a sort of an outside option if you want to store your wealth somewhere. This is why some people say this is a digital gold and this is a stored value. But I mean, if this is a threat, I'm not so sure. And what the Fed doesn't like it, yes, for sure. If I was working still at the Swiss National Bank, I would not really support it. But I think it's quite good to have it. And now it's becoming big enough so that you cannot really kill it. And if you want to kill it, I think it will even, add oil on the fire and make it even more attractive. But then if you get rid of Bitcoin, which currently represent only maybe 55% of the market cap, all the new projects provide a big new financial services and new services, digital services, which are not a threat to central banking, to fiat money. They are just allowing for new way to organize financial services, more threat to traditional banks, typically, that slowly enter the business and want to understand how it works. Because you can, this database is a huge settlement system. And you don't need to have a huge back office. You don't need a huge middle office. You don't need to have post-trade, whatever it is. It works 24/7. Bitcoin has never, ever been hacked. So it's extremely safe. Imagine you can do that and you make a system that works perfectly well 24/7. That's fantastic at low cost. I mean, I think there are different ways of using blockchain, of thinking about cryptocurrencies, of introducing stablecoin as well, and of having a central bank digital currencies in this environment and thinking about that. I think that regulation is coming, and what we observe, Switzerland is a showcase because it has been very early in developing that, but has done very well and is definitely in advance. But what we do observe is that more and more US is far behind that. Europe, for example, is developing a framework. The UK has developed a framework for stablecoin. Singapore is doing quite well. It's just coming. I mean, you cannot do anything against that. And most of the time, regulator observes, analyze, and then just follow the reality which is developing. And this is the reality. So I'm sure that regulation will come. It will take some time because you need to precise definition to understand the difference, and it's truly global. You can create a Swiss franc stablecoin out of any jurisdiction. So you need to find a way to create clear guidelines on that. But I think this is coming, and we see a lot of development on the regulatory side.
Great. Well, I think if you have about 6 other hours, Yves, we can go through the rest of the list of questions, but obviously we don't. Thank you very much. That's really interesting. And again, lots of people commenting on it. So brilliant. Thank you very much for your presentation, and take care.
Very much appreciate all the likes. That's really kind. Thank you very much. Great to be with you. Pleasure. Thank you. Bye-bye.
Bye.